Hello. The topic for discussion today is cash flow statement. So cash flow statement is one among the three financial statement which is very important and integral part of any organization. So what do you mean by cash flow statement? Cash flow statement is the actual movement of cash into and cash out of an organization, which means it simply refers the cash flows of an organization, whether it is into the organization or out of an organization. The flow of cash into the business is called as cash inflow or positive cash flow. So whenever you receive amount or money or fund into your organization, that term is referred as cash inflow, and that is why it is known as a positive cash flow. And whenever the cash is gone out of the organization or it is applied in some other field or for some other purpose for organization, that is known as cash outflow or a negative cash flow. The difference between the inflow and outflow of cash is the net cash flow, which can be observed while we are doing it in a cash flow statement. Okay, so it is a statement simply showing the changes in the cash position of an organization from one period to another. So when this statement is prepared, it will reflect the statement which shows the cash position or the change in the cash position of any organization from one point of time to another. Okay, and that is why this is a very integral part of financial statement and which is dealt in IAS 7 as per Indian accounting standard. Okay, and this schedule states everything regarding to the cash flow statement, and it simply refers to the cash inflows and outflows happening in an organization. Okay, the next main thing which we have to discuss is the objective of preparing cash flow statement. Why is it necessary to prepare cash flow statement in an organization? Okay, to determine cash requirements. So whenever you prepare the cash inflows and outflows of organization, you can easily determine the cash requirements of that particular organization over a period of time. Secondly, to determine the cash position. As I told you, whenever you prepare a cash flow statement, the first thing which can be determined is the position or the cash position of your organization. Whatever sources are there, from whatever sources you're going to get the amount, and wherever you have applied those amount can be reflected very well. And efficient and effective cash management can be done because you will know to what part or from what part you're getting the money. So the management of cash can be done very effectively, and to identify the liquidity position, you can also see whether the company is in a liquidity position to run its day-to-day transaction, and it also helps in dividend decision. So you can easily determine whether your company is going to make profit and whether the declared dividends can be given, and based on that the dividend or the profit share which you're going to declare can be decided. Provide information in proper manner. So whatever sources and applications of funds and money is there, everything is reflected in your cash flow statement, and that's why it provides an information in a proper manner. So these are the main objectives of preparation of a cash flow statement. So this cash flow statement can be broken into three main activities, or it can be classified into three main activities in order to make it very easy for others to understand each and every activities in an orderly manner. So statement of cash flow is basically classified into three things like operating activity, investing activity, and financing activity. So when it comes to operating activity, it involves revenue generating activities of an enterprise. That is, producing or acquiring goods and services and selling them. So whenever there is an like a revenue generating activity happening in your organization, that kind of transactions will always come under operating activities. Okay, so when you distinguish the cash inflows and outflows in operating activity, some of the examples of cash inflows will be cash sales. So whenever there is sales happening and you get amount or money from that sale, that is a cash inflow activity coming under operating head. Okay, and another example is cash received from debtors, commission received, royalty received, or refund of income tax. So these are all the revenue generating activities of an enterprise. So it will have that is producing or acquiring goods and services and selling them. All this thing will come under operating activity, under which we have seen examples of cash inflows. So whereas what will be the examples of cash outflows of operating activity? It will be like cash purchase or cash payment which you're making to a creditor, or payment for operating expenses like when you're paying wages, when you're paying salaries, when you're paying rent or insurance. All that is an activity which is operating activity happening in an enterprise. And cash payment for tax. All these are cash outflows that is happening under operating activities head. So operating activity is simply any activity which involves a revenue generating function, it will come under operating activity. The next head is investing activity. So it includes purchase and sale of fixed asset, investment in securities. It means acquisition and disposal of fixed asset and investment. So whenever there is an acquisition of a fixed asset or disposal of an fixed asset or investment, all those transactions will come under investing activity. I am going to give you an example of cash outflow and cash inflows happening under investing activity. So when you see cash inflow activities, it will be like sale of fixed asset or sale of investment, or simply interest or dividend which you are receiving. It will come under cash inflow, or recovery of a loan which is made. So whenever you are going to recover a loan which is already made, all that will come under cash inflows. You got it? And cash outflow, some of the examples, as you already know, when sale of fixed asset is an inflow, purchase of fixed asset will come as a cash outflow, or purchase of securities or investment, loan given to a borrower, all this come under investing activities. So these are some of the examples coming under investing activities. Next classification is financing activities. So cash flow from financing activities shows activities which result in changes in capital structure. So when you do an activity and it is going to affect the whole capital structure of your organization, those kind of activities will come under financing activities. Okay, it includes raising fund from owners or borrowing from creditors and repayment or redemption of shares. All these things will make a major change in the capital structure of organization. Those kind of transactions will come under financing activities. Okay, so I'm going to give you some examples of cash inflows and outflows as we already did for the other two activities. So cash inflow examples coming under financing activities will be issue of share capital. So when you are going to issue share capital, it will make a big change in the capital structure, isn't it? So it is a financing activity. Or issue of debentures or bonds, long-term loans, short-term loans. So whenever you're offering such activities happens, or whenever these kind of activities is taking place in your organization, These comes under financing activity. Some of the examples of cash outflows are redemption of shares or repayment of loan or payment of dividend or payment of interest on debentures and loan. All these examples will come under cash outflows happening under financing activities. So these are the main three classifications under which you will classify each heads or transactions while preparing a cash flow statement. So I'm going to show you an simple format of how to prepare a cash flow statement. So this is how you're going to prepare a cash flow statement, and all the things can be discussed in detail like cash flow. First thing what you are going to do is you will transact, or you will make note of all the transactions coming under operating activities. So first thing, you will give a heading like from operating activity, and then you will include all the things which is given, which we will discuss later while doing a problem. So this is a complete format of how you prepare a cash flow statement. All the things which we had discussed under various heads like operating activities, investing activity and financing activity should be mentioned while preparing a cash flow statement. Okay, which we will discuss while we are doing a comprehensive problem on cash flow statement. So advantages of cash flow statement is, as we already know, the main objective of preparing a cash flow statement are its advantages also. So it shows the current cash position or the future cash position of a company, and it will also help us take financial decisions and dividend decisions as we already had discussed, and it will also explain the causes for poor cash position. You can identify from which activity your amount is being more used or it's being used more. Everything can be identified. So that is one of the main advantages of cash flow statement. So I hope the cash flow statement and the three classifications of cash flow statement is clear, and in the next class we are going to discuss the complete format with the problem so that you will be able to follow it much better. Thank you for listening.